My name is Peter Reznicek from ShadowTrader.net, and this is the ShadowTrader Video Weekly for Sunday, April 24th, 2022. The title of this video is Spring Cleaning, the Final Video. I've been doing these videos now since I think about 2007-ish or so it's been a very long time. And I've made a decision this afternoon to end doing these videos on a regular basis every weekend for you. Some of you may be disappointed. I know a lot of you have come to really enjoy this content, and I do appreciate that. And it's been great to be sharing this stuff with you week after week, but it just takes an inordinate amount of time and editing and resources for me to get this stuff together. I also have to be doing it on Friday night or over the weekend, which is really kind of, affecting my quality of life. So what I've decided to do is just end the commitment, so to speak, to be doing the videos every single weekend. I will still be coming out with content on YouTube regularly, but as I've been alluding to in the past, I'm going to be focusing that content more on options trading, especially weekly options, and specific to what I do in my weekly options advisory. So you're going to be seeing a lot more types of videos of how to specifically apply broken wing butterfly strategies, how to apply unbalanced butterfly, how to repair a trade, what to do in this situation, that situation, things like that. Of course, as I always like to remind people, if you want to get my analysis, commentary, trades, real time, etc., this is the link down below, shadowtrader.net/options. And instead of just having me speak to you, for a short period of time at the end of the week, you can get what I'm thinking every day as it's happening, which I would hope would be a much bigger help to you as it is. So anyway, in closing, I just want to say it has been great sharing this content with you for all these many years. Some of you have been watching these videos since I started them. I do appreciate your support. And without further ado, let's roll into this week's video. So I titled this video Spring Cleaning for a reason. Obviously, it is spring. I purposely wore this shirt for the video because it's kind of springy, I guess. But it's spring cleaning because of what's going on in the market and the way that everything is getting cleaned out. If you recall, we've been talking a lot in these videos over the last couple of weeks about a lot of divergence between sectors. One of the things that I pointed out has been consumer staples, the XLP ETF, very strong. Healthcare, very strong. Energy, very strong. And as the market has been going, sideways to down, whatever, or sometimes overtly just down, these sectors have actually been strong. But over the last two sessions in the market, Thursday and Friday, this dynamic has changed. And I'm going to show you that in a second in the video where everything is being thrown out like baby with the bathwater, etc. All sectors are going down. And this is when the market is actually really bearish because there are no longer quote-unquote places to hide. There are no longer sectors that are showing relative strength to others where they're actually going up on a down day. On Thursday and Friday of this past week, all sectors were going down, and we're going to talk about that in a second. Now, the reason why this is happening, I believe, is twofold. Very simple. One, the Fed has made some comments recently. It was over the course of this week, Powell and others, really reiterating their stance of how hawkish they're going to be, cementing in that we will get a 50 basis point hike in May. Okay, and also talking about, basically the usual jawboning that you see by the Fed, but it just felt like it took a different tone. So are there 75 basis point hikes coming? I don't know. Could there be an emergency meeting where they hike rates in between meetings? Again, I don't know, but the tone just seemed to get slightly even more hawkish this week from the comments, and the market obviously doesn't like that. The second reason why the market is continuing its plunge like this, especially into the end of last week, is simply the fact that rates keep rising. We've talked about this constantly in these videos, and I even said recently in a ShadowTrader Video Weekly that it's just a question of when, not if, the 10-year rate hits 3%. Well, we almost did last week, and it just keeps pushing from lower left to upper right. It's all the same thing. So you're going to continually see this pressure on the Nasdaq for that reason, which is putting pressure on the ES, etc. Okay? So basically the trend is down, and now we have this spring cleaning dynamic that I'm talking about where everything is getting cleaned out because we're seeing strong sectors even start to succumb to some selling pressure. All right, let's start with some technicals in the bigger picture, do a top-down approach, and then we'll kind of drill down to what some of those sectors are that I was talking about. But we'll start with the S&P daily like we usually do. Main thing I want to point out is that we are about to break the uptrend from the Fed lows, and this is super duper important. Like obviously Thursday and Friday were very strong moves to the downside, but here's what's important is literally we are still technically, big air quotes on that one, in an uptrend until we break this line, and it's about to break. So are the Fed lows imminent? I think so, because it's not on this chart, but we've talked a lot in the past about the Fibonacci retracements of this move from here to here, the midpoint, the 61.8. Well, guess what? We're now through the 61.8. And as I always say, when you get a daily close below the 61.8, the odds increase exponentially that the move will then be 100% retracement, what I call round tripping, and we will see the Feb lows. So we're probably going to see the sub 4,200 in the S&P relatively soon, all right? Let's shift gears to the Nasdaq 100. As I was saying, more sensitive to the rise in rates than a lot of the S&P 500 stocks are, and no big surprise, obviously, bigger sell-off in relation to the Feb lows. And look how close we are now here. We're actually almost there, right? Not that much movement left before we touch the prior lows in the NDX. So I would expect that we do retest that relatively quickly, probably happening this coming week, and a break lower. These two lows here also are equal, which is a slightly different look than the S&P. If you recall, the S&P has the low in Feb, and then it kind of has like the two slightly higher lows in March, but in the NDX they're equal. That also makes this back-to-back low here weak. In market profile, we have theory that we talk about poor lows and weak lows. A poor low is one that has structural deficiency. So that means that in very, very simple terms, I'm just going to oversimplify it to do it quickly, that bell curve distribution of the market profile, it just doesn't look right. Meaning, for instance, a classic thing would be a poor low, that it doesn't have excess on the bottom. Think of the bell curve, how it should go like this, and it should have the tails on both ends. And if it's missing the tail on the bottom, we call that a poor low because it is structurally deficient, etc. Meaning it doesn't look the way it should, right? All prices should sort of distribute on this curve normally, and it just doesn't look right. That's a poor low. But a weak low is different. A weak low is one where you have a low that was made because it came to a very specific, very nuanced technical level. And a prior low is usually a weak low, meaning the only reason that the market bounced here is because it bounced here. So this low is weak. And now that you have two areas here where the market has been supported, again, what do you think is going to happen when test number 3 goes to that area? As I always say, you can only knock on a door so many times and then it opens. Don't expect this to support. So I would expect that if you're short Nasdaq stocks next week, maybe don't cover at this low, because you're probably going to get some sort of a move lower. And that's probably what's going to happen. You're probably going to take out that low and move a bit lower. Let's go back to this spring cleaning concept, if you will, in terms of when you do a spring cleaning, you just clean out everything, right? You go into rooms, for instance, that maybe you haven't been in like 6 or 8 months, and you start cleaning those rooms as well, in addition to the rooms that you spend most time in. So I think that analogy is so apt for what's going on in the market right now, because now the market is starting to clean out everything, including consumer staples, energy, healthcare, and other sectors that have been very strong. And this is a daily chart of XLP, and interestingly enough, it's been so relatively strong that it still hasn't even broken trend. But look at the activity on Thursday and Friday. Big topping tail, excess high, and then this big slam down on Friday, and now coming to the trend. So how will this impact the S&P negatively, probably, when this sector, which is relatively heavily weighted in the S&P, starts to actually break trend and move down? Think about that, right? Like, there's a specific reason why there are periods in the market where it feels like it's like one day up, one day down, one day up, one day down. That's what last week's video was about. Remember, we talked about yields, and we talked about this concept of round trips. And the reason that there was so much round tripping back and forth is because you have this push-pull where you have a sector like XLK that's 30% of the S&P that's going down pretty firmly, but you've got healthcare and staples and energy, et cetera, that are making up another 30% of the S&P that are going up. So that push-pull is going to be there. And those of you that are a little bit more astute, and you really are a student of, you know, all the things that I've been teaching, and you want to take it a step further into market internals, this is why those are the types of days where you have to ask yourself the question, Why isn't the breadth weaker, for instance? Or why haven't we registered a minus 1,000 tick, et cetera, things like that. That's where that nuance comes into play when the sectors are pushing and pulling against each other. But what I'm saying in this video is we're not seeing that now. On Thursday and Friday, the tone changed a lot and all the sectors started really selling relatively heavily. Okay, so the first one I'm showing you here obviously is XLP, and you can see we're about to break trend in the XLP, should have negative implications for the S&P going forward. Okay, again, spring cleaning, healthcare, very strong in this market, but look what happened on Friday. So the uptrend is about here, and here for the first time in a while made a lower high and then absolutely got destroyed. Is there potential that healthcare stocks round trip? Could be. I mean, you know, this is what I call buyers shut off, basically, where one red candle negates multiple days, many days of green candles, or you know, a pattern going up, and it just gets negated by one day. So is there potential that it falls further? I think so. We've only now just come to the 50 MA. We haven't hit the 200, and again, we shall see. But the point being is, if you are a watcher of the broad market, as many of you are, you're probably wondering, what do I do with my portfolio, etc. These are the types of things that negatively impact the S&P because of this spring cleaning dynamic where everything is going down, that there just aren't pockets of strength where investors can hide. And last but not least, what's going on with energy? It's been a stalwart all this time. It's been very strong. And yet again, same type of activity. Look at Thursday and Friday and how radically different that selling in tone, in size of the candle, etc., in expansion of range, how radically different that looks from the activity here as the oil stocks have been following the price of crude higher because of inflation, supply chain, etc. And now you see this action that really kind of changes the tone. This is only 4% of the S&P, so it's not that big of a driver. But again, I'm just showing you this chart to further illustrate this sort of spring cleaning dynamic where everything is kind of moving down at once. And if just looking at the sectors themselves doesn't drive the point home, then our new weighted AD indicator, which I think is just absolutely fantastic and has been great in helping us look at turns in this market and sort of predict and confirm, etc. Look at the situation between the weighted sectors and the non-weighted sectors. As always, the white line here, and look at the divergence here earlier in the week where you actually have the unweighted line, which would mean that it puts equal weight on sectors such as energy, healthcare, consumer staples, etc. Notice how positive, and you can think of the histogram more as like technology and other sectors that are more heavily weighted. They are going down. But look at the dynamic on Thursday and Friday where it just moves together in lockstep, where you've got the white and the histogram in lockstep. Very low reads. To be honest with you, I haven't seen it this bearish in quite a while. That was Thursday's read, and Friday was a repeat of the same exact situation where notice the unweighted line riding along in concert with the histogram. So basically, again, just a simple confirmation at a glance of how strong or weak all the different sectors are, which are the 11 sectors that are the actual driver of the S&P. So I highly recommend everybody check this out. It's on our website, shadowtrader.net, under the stocks tab. It's called Weighted AD Indicator, and really kind of worth its weight in gold, definitely. So highly recommend you guys check this out. And that's all for this week, and I guess forever as far as these particular types of videos are concerned. But before we sign off, let's recap some of the things that we were discussing and how I see the market moving into next week. So relative weakness is now across the board. I called the video spring cleaning for a reason. We are now starting to see selling in sectors that we did not see before, such as the ones that I mentioned in the video. And remember, when everything is pulling in one direction on the S&P, when all 11 sectors are going down, as you can see here in the weighted AD indicator, that causes much bigger breaks in the market. In the NDX, I feel that the effect of all this is going to be even worse because it is more affected by the rise in short-term rates. You have the 10-year pushing at the 3%. It should potentially break higher. And watch for those rates actually to maybe even hockey stick way above 3%, because as my mentor in the market profile, Mr. Jim Dalton, always says, the wagon wheel runs fastest at the bottom of the hill. So that actually could really accelerate the losses in the market as we move down, and especially in the NDX, if we break that double bottom now from earlier in the year that I feel is a weak low because it was so exacting, it was so perfect. That second low only stopped there just because it was right, tied in perfectly with the first one, and that tends to break easily as you retest that area, all right? Last but not least, as I was saying in the intro to the video, this will be the final Shadow Trader Video Weekly, but I still will be having a presence on YouTube. I'm actually excited to be delivering content in the near future. It will not be coming out weekly, but it'll be coming out sporadically, but it will be very, very targeted. I will probably be doing a lot of recording during the day, showing exactly what's going on in the moment and how I'm trading it. And from that, I think you'll be able to glean a lot of educational value to see how a trader actually takes care of these situations as they're happening, entries, exits, management, etc. Because as I've always said, I'm only speaking to you here at the end of the week when the market is closed. We're looking at things kind of in the rearview mirror, but in this case, I'm going to show you more content where you're looking straight out through the windshield with me as things are happening. So I'm excited about that. All right. I also have a pretty big following on Twitter. You can join me there. My handle is right there at Peter Reznicek. Follow me on Twitter. I do put out some content there. And as always, if you want to get really the best of what I do as it's happening in real time, hit this link down below, shadowtrader.net/options. Get my trades live in real time. Get my commentary live in real time. Peter's Pre-Market Perspective, which is a separate report that I write analyzing the market profile in the ES futures every morning. That's included free. I can't stress enough that I really do believe this is the best value out there on the street. A lot of people are charging 3 to 4 times what I charge for this type of service. Mine is $49 a month because I like to keep it at a level where even newer traders can feel that it's worthwhile to subscribe and get my information. So if you're interested, shadowtrader.net/options. I would love to see you there. And that's it. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, for the last time, I wish you good trading and good night.